Welcome back to the channel. Today's stock snapshot is Amazon, AMZN, and I think it's worth considering right now. Let's get into it. Here's the deal. Amazon closed at $172 on Friday, April 4th, 2025, down about 6% from Thursday's $182. The market's been a mess lately. NASDAQ dropped 5.8% Friday after those 10% tariffs hit on April 5th, and China's 34% counter tariffs are set for April 10th. Tech stocks are getting hammered, and Amazon's no exception. But I see an opportunity here, and I'll walk you through why. I've always liked Amazon's setup. They've got the e-commerce business we all know, AWS for cloud computing.
So what's changed? Though Amazon has long dominated the US e-commerce market, online sales are not actually the biggest moneymaker for the company. Its e-commerce division isn't even profitable internationally. Instead, Amazon Web Services, or AWS, has generated the majority of the company's operating income.
And an ad segment that's growing quietly. Back in February, it hit $243, its 2025 high, so at $172, it's down nearly 30%. This tariff storm's the culprit. They started Saturday 10% on all imports, and Friday's sell-off wiped $5 trillion off the S&P 500 in 2 days.
It has been just a major flush out here for the market. How much further could we go, especially when you look at an S&P that has lost so much value here, 9% this week now, but is still arguably trading at multiples higher than what you'd expect with recession, despite what we're seeing in the bond market with the 10-year Treasury yield falling below 4%.
And with PE still at 19 and bond yield still at 4%, none of this pricing looks like pricing in the sort of recession that would come if these tariffs remain in place for an extended period of time. Basically, everybody is betting on the fact that the new administration will roll back these tariffs in short order. If that doesn't happen, it means two things. One, a lot more pain for the U.S. economy and the consumer. And second, escalating retaliatory efforts abroad, kicking off a global trade war. And if that happens, the moves that we've seen so far will look pretty modest in comparison to the wreckage that will come if those tariff policies persist.
X is buzzing with trade war fears, especially since Amazon imports a lot from China. But here's my take. Amazon's not as fragile as the market thinks. Sure, tariffs could bump up costs. Maybe 40% of their goods are imported, but they've got a massive logistics network and over $61 billion in cash to figure it out. The 6% drop from Thursday feels like panic, not a broken company. So why buy at $172? First, the business is strong. AWS is a profit engine, over half their operating income last year, and cloud's not slowing down. E-commerce keeps humming too. People don't stop shopping online over a tariff hike. Last earnings beat estimates, sales up 10 cents, and I'd expect that to hold. Second, this price looks cheap. It hit $168 Friday intraday, now it's $172. X posts are calling it oversold below $176, and I think they're right. Could see $186 in a week if the market steadies. Third, long-term value. Amazon's a $1.9 trillion name, down a bit now with a moat in retail and cloud. At $172, it's well below its $201 average from last year. Tariffs might hurt margins short-term, but they'll adapt. They've done it before. There's risk, though. If tariffs push costs higher than expected, $172 could slip to $161. Friday's low was $168, so that's in play. If China's 34% tariffs tank demand, retail could feel it. Earnings might dip if shipping gets pricier, but I think the market's already over-punishing it. $172 bakes in a lot of that worry. I'd rather buy this dip than chase $201 later. X sentiment split. Some panic, some see a bottom. I'm in the bottom camp. So here's my stance. Amazon at $172, down 6% from Thursday, but I'm buying. The tariff panic's real, but this is a discount on a great company. Maybe $186 short term, $201 plus long term if they keep delivering. If you're with me, hit the like button, drop your stock pick in the comments. I read them all, and subscribe if you're not in yet. Thanks for watching. Let's keep growing those returns.